Let's bring on board Aniruddha Naha, CIO Alternatives CIO Alternates at PGIM India.
Yes.
Right? Okay. Aniruddha, great having you here.
Thank you.
First
Pleasure
off. Aniruddha, talk to us about what you're liking at this point. We're just chatting and you said you like small caps. That's really
Right.
the way you're looking at the texture currently.
Right.
What within the small cap universe is interesting you?
Okay. So thank you for having me out here. I think what is interesting and the reason why we believe this space can turn out to be very interesting is generally leverage in this segment is completely out. Okay. Companies, management they've cleared up their balance sheet. GST implementation has forced businesses to actually represent true numbers, new businesses getting listed there. Now, the other interesting part is the universe here is almost 3,500 companies to choose from. So here I think new segments, whether it is, whether it is within cap goods, there are quite a few sub-segments. That's what we like. We do like the water segment. That is something that the overall value chain, we see a lot of interesting businesses coming out there. A segment which is completely in the small and micro cap space is recycling. Okay, that's something that we like. Fallen down sectors, which no one seems to be talking about today. Chemicals. That is something which, that we believe can probably generate a reasonable amount of wealth over a period of time.
Let me break this up, Aniruddha, and I'll pause you there. Really, the point here is, let's talk about recycling and water waste to start off with. Do you believe valuations are reasonable? Growth runway is strong? What is it that's attracting you to this space? And what's the kind of risk reward here? Are there going to be a few winners? Are there going to be pretty much everyone who's participating who will do well? Because defense is one such space where there are a lot of players. Most of them will do fairly well for themselves because just the traction is so strong. Give us a sense on both on this recycling and water waste, because there are a few players,
sure,
few of them listed, which investors can tap into. But I'm just trying to understand whether most of them will do well or
sure,
will it be a few winners?
Sure. So our belief is the scope of opportunity over the next 5 to 10 years is humongous out here. Okay. What we are trying to focus on here is good businesses, good promoters, clean balance sheets, good cash flows. I think so. Many of these segments again have sub-segments where either they deal directly with the private sector or they deal with the government sector out here, okay, sure, as EPC contractors. Our focus has always been to stick with the guys on the private sector side, where the working capital cycle is far cleaner to work with. So it is not going to be everyone wins it, because these are literally extensions of infrastructure companies to a certain extent. Sure. Anyone who supplies into the private sector side, manages their cash flows well and the working capital cycle, we believe the runway from them is humongous. There is literally no company out there in the large or mid-cap space which has any representation in this space.
But some of these businesses run these risks, Aniruddha.
Yes.
Wherever ROCs are elevated, you'll see large conglomerates come in and capture market share. And they will not just capture market share, they will take 50%, 60% of the share in year 2, year 3.
Right.
Which poses a risk to some of these companies. Isn't that at all something that bothers you?
See, that's happened with even a segment like paints, right?
Correct, yes.
Right. So our sense is it's a boon, it's a bane. You show higher numbers, you will invariably attract competition. That's where probably assessing the moats of a business become very interesting. If you have got technology to support any of your businesses on a segment, and that especially technology becomes the barrier according to us. So if you've got that, wherewithal, where you can defend yourself through technology, I think so. Those are the businesses that we keep looking out for.
And valuations matter?
Yes, absolutely, absolutely. So couple of years back, we were never looking at something like chemicals, as I said.
Sure.
Today, no one seems to be talking about it. What we are trying to figure out is there are so many chemical companies, and everyone was a specialty chemical 2 years back.
Yes.
Okay. So today we are trying to see which are those businesses which are able to hold on to margins through this down cycle. Probably they will be the specialty ones which will evolve over the next 3 to 5 years.
So which are those?
We usually don't go down to names.
Sure. But segments?
Broader segments, so anything with refrigeration, coolants, Even amines probably as a segment could turn out to be very interesting. But it's a very broad basket, but I think it's the tail on commodity is very long. It's only few niche guys sitting out there which we believe will over a period of time go ahead and deliver strong numbers.
And how long for the chemical cycle to turn, now that we're talking?
Our sense is the base is built in that sense. Okay, competitive intensity seems to be coming off in some of these segments. Excuse me. But when we invest with the next couple of years in view. And if someone takes a couple of years of view, we believe the returns from here in terms of how chemicals will play out could be very, very interesting.
Okay. Kunal, do you have a view with regard to the chemicals basket? Any names which look interesting on charts? We generally don't talk chemicals, so I thought let me.
Yeah, but I think SRF is the one which actually pops up on the charts every now and then. And I think with the moment you start to see confidence emerging on this name, that generally trickles into the other stocks. I think even at current levels, the stock is poised at a fresh intraday high. So looks attractive and one of the better names, more stable and more formidable in terms of the chart patterns for SRF.
All right. Aniruddha, the other piece is that, there is a view that small and mid caps in general are overvalued. And let's take a slightly more 30,000 feet view here.
Sure.
And this has been the case for the last year or so. We had a very, very well-known fund manager who came out and presented his case. What now? Do you believe valuations have started to somber? And is the earnings re-rating not too far away? Is that something one can anticipate within this space?
Sure. So this is something very interesting. What happens is small and micro caps especially, they get bucketed as one basket. One finally has to realize when you go beyond the 250th company you started off, and we go all the way to the 4,000th company. So we're talking about 3,500 odd companies out there. Okay. So there is enough and more of opportunity. That is one. Now let me give you an example. A staple company in India usually trades around 3.5 times sales. Okay. There is a listed good staple company which is available at less than 1 time sales, generating an ROE, ROCE of 30%. Okay. Debt free, cash flow generating. It's just that today staples.
Broad market cap?
1,200 crores. Okay.
Okay.
So that's what's interesting to us.
Right.
So it is. In this segment, you will have to go down picking up ideas, okay, and it has to be very, very. So within a sector, if I talk, there would be successful names, and there would be businesses which are not that successful. So it will all depend on what you pick up in the portfolio. So to answer your question, I think so. There are pockets which are extremely expensive. Okay, whether it is an EMS, whether it is defense, etc. But there is a segment of the market which no one seems to be talking about. As we discussed, whether it's chemicals, etc., including staples to that extent. If you go ahead and buy a good business with a 3-year view, we believe a lot of money is still there to be made.
Interesting. What about the financials? Anything within the financial pack you like? Because we generally, when we talk financials, we talk large cap. We generally talk the bigger banks or the mid-sized banks. We rarely talk about the smaller ones.
Right.
And there has been plenty of pain now. We've seen a prolonged period of pain over there. Any turnaround could well bring these stocks back to the fore. Do you expect that? If so, how quickly and how large is the opportunity?
Sure. So we've been, as a fund house, generally, we've been underweight financials on the lending side for the last 7 years. And that's the stance that we continue to maintain. Okay. Now, having said that, when you go down the market cap, you are taking unnecessary risks in terms of the leverage generally that exists on the balance sheet. So we do like financials on the small and micro cap side, which is non-lending, whether it is asset managers or etc., where valuations have also started correcting. There are very interesting names. But when it comes to the banks and financials, NBFCs on the lending side, we would probably take a look at them a quarter or 2 quarters down the line, especially the MFI segment, where we believe the last leg of pain is still left. At that point, maybe a couple of them could turn out to be very interesting.
So a quarter away is how you're judging it. Okay,
Absolutely.
so we wait till Q3 for that to play out. Now, Aniruddha, last piece. What should you avoid? What are the baskets that you're finding? In general, the re-rating is now done.
Right.
It's better to sit back, relax, wait and watch as to how this now plays out, how the story unfolds, the next 3-4 years in terms of growth is factored? What are those sectors?
So what we are just before pointing out the sectors probably or segments, I think what we are trying to build in is what happens if interest rates move up from here. Globally, there are initial scares of a credit issue happening in the US. Some of them events have happened in the last 2 weeks, which will push up interest rates. Pushing up interest rates, I think the biggest or the riskiest segment of the market is where valuations are expensive. So anything and everything which is beyond a 30, 40, or maybe a 40p or 50p, depending on how judgmental you are. I think so. That is a segment that we will avoid. So EMS, as I mentioned, looks expensive. The growth seems to be interesting, but where are the valuations is something that we will keep a very close look at. Anything where it's only story not backed by numbers coming through. Okay, so in a cycle we've seen, even as we speak today, there are companies which are delivering numbers, but people don't care about it. And then there are segments which are completely driven by stories, but no numbers. Okay. So that second segment is what probably we'll try and avoid.
Okay. Thank you so much, Aniruddha. It's been a pleasure having you here and getting that perspective.
Absolute pleasure.
And viewers, I hope this gave you enough in terms of takeaways, because these are some segment sectors which we don't talk as often about. And I hope that this brought you that. But let's